Another busy week ended in subdued manner last week as a big portion of the world markets were closed on Friday and yesterday, Monday as well, due to Easter weekend. So I guess just to recap in terms of what we saw last week, unexpected oil production cuts from OPEC and Russia. But I think the main question here is, when the Federal Reserve's tightening path is going to end. As you saw on Friday night, US labor data is now starting to show weakness with ADP and jobless claims numbers. But the headline non-farm payroll came in line with the expectation. So last week, DXY or USDX fell 0.5%. To close the week at 102.094 points. The main point for the last week, or the key headline, was actually non-farm payroll, US data coming out on Friday night. So the data actually, the reading came in at 236,000 jobs in March, which is lower than the previous month and closely in line with the market expectation. As a result of that, we saw USD appreciate a little bit and break that multi-year downtrend line as well. So the job market is clearly starting to slow down in the US. Fed interest rates are beginning to have their intended effect. The unemployment rate moved from 3.6 to 3.5% as the labor force participation rate increased from 62.5% to 62.6%. As we can see, clear data effect indicates the labor market is cooling off, but still indicate a robust economy. So what that means is obviously going into the meeting in May, Fed will come out. Jerome Powell, I believe 64% is already been priced into the market that we will have another 25 basis point rate hike. This might be one of the last ones by Fed ahead of obviously wait and see scenario to see what's going to happen over the coming months. Right. Early last week as well, the data showed the job opening tumbled to 632,000 in February to 9.9 million in total, while jobless claims ticked up last week as well. Quite a lot of data in the USDX, and as we can see, obviously there is quite appreciated US dollar that's actually gained a bit of strength on the close, even though for the full week the USD actually closed lower at 0.5%. That resistance level at 102.50 to 102.70 might play a key role in the coming weeks ahead of this week's news events as well. Well, what happened in terms of the rest of the currencies and markets? So Eurozone PPI and PMI came broadly in line with the expectations. Obviously, Euro traded once again modestly sideways throughout the week. The question is, ECB members are still favoring another 50 basis point hike in the meeting, but will this materialize? Euro has been in a clear uptrend for a little while as well now. We believe 50 basis point hike would actually only appreciate Euro and find buyers, but it's a wait and see scenario as well. The Great Britain pound had a decent week against the majors, closed about 1.24 for the first time since January, and has broken out of a channel resistance as well. So it's broken through a downtrend channel, it's broken through a major resistance level, and pound actually looks to be quite bullish at this point in time. Commodity currencies, risk asset fell for the last week, no significant progress at all. CAD, AUD, and New Zealand dollar all closed the week roughly flat against the USD. It's an interesting point because Reserve Bank New Zealand actually hiked the rates by 50 basis points rather than 25 basis points, which is actually what the market anticipated and expected, but failed to give the Kiwi strength. The reason for this might be that basically Reserve Bank New Zealand was actually quite aggressive in their, raising the rates over the past year. And, the market is already kind of factoring in the fact that we might be coming to the end of the interest rate cycle. So, the Kiwi might be actually factoring that in already. Out of all these currencies, the exception was the Swiss franc, which rallied 1.1% versus the dollar. But the big talking point last week was actually oil. Oil had a strong week following the unexpected OPEC Russia production cut of well over $1 million barrels per day. And as a result, crude oil rallied over 6% for the last week, which is actually quite significant. Closed the week at $80.42. The key headline here was actually gapped up on the open, moving sideways at the moment, and it will be interesting to see what happens with oil. Let's just actually go into the oil chart at the moment and basically bring that up to actually see where we are right now. So I'll go into the daily chart and I'll just bring all this in line so you can actually clearly see clear downtrend in play, broken through, touching the $80 level mark. there is a significant gap here between 75, 50 and $80 mark. So it will be interesting to see what happens with oil. I guess the main point here is that OPEC production, you know, the deals that Saudis are doing with China as well. So there is actually quite a lot of talking points going on in that sector. Precious metals, they also remain very strong. Yields are under pressure. Dollar continues to retreat. Silver rallied for the last week 3.6% to close the week just shy of $25, and finally broke out of a 2-year corrective channel. So silver is actually one to watch. A lot of our clients absolutely love trading silver and commodities because we've got super tight spreads on these. Gold rallied as well 2%, closed the week at $2,008. Retreated somewhat below 2000 level over the last couple of days. Might be, you know, finding some sellers and profit taking, but it's probably eyeing that $2,075 high. So any retracement in gold at the moment or silver would be considered more of a consolidation or profit taking of the table rather than a clear downtrend in play or sellers coming and taking over. Equities actually had a subdued week last week. There wasn't actually much happening in the S&P 500 and DAX. Aussie index actually hasn't moved much at all as well. You know, the main reason for that is because there was a lot of the anticipation and are waiting on the non-farm payroll data actually to see whether it's risk on, risk off. As a result, obviously, commodities did have a lot of good volume, predominantly on the fact that everyone was actually trying to cover itself ahead of the news. Bonds are still strong, and they remain and they find important resistance going forward. 10-year Treasury yields fell another 20 basis points to close the week at 3.29. Cryptos also showing indecision at the moment. Bitcoin is marginally lower at 28,100 level, $1,000 away from the key resistance. Ethereum, on the other hand, closed the last week at $1,870, 2% increase for that week as well. What we're actually seeing, which is actually quite interesting as well, we are seeing quite a bit of strength in cryptos as well. So it seems like a lot of players out there, a lot of traders are getting into cryptos. They're considering it as a risk off asset to an extent as well. So we are seeing a lot of flow go into the commodities and cryptos at this point in time. But let's go into the week ahead and see what's actually driving the news for this week. So what I will do is I'll do the impact level only high news events. I'll just apply that to see what we have for this week. We've got consumer price index out of China, 11:30 today. We've got consumer price index out of the US as well on Wednesday. Tomorrow, that's going to be a headline news as well with regards to the figures, given the non-farm payroll data actually came in line probably with the expectation or slightly above past Friday. Bank of Canada, Canadian dollar as well. So monetary policy report, retail sales out of the US as well. So all these will actually play quite a significant role in terms of what's happening on the market as well. Out of AU, we also have employment data coming out on Thursday as well. The key headline is actually Friday's retail sales. So previously it was in negative 0.4%, and we are waiting to see what happens there. If you log into the economic calendar as well, what you'll be able to do is actually highlight the actual event or the impact that it's having on the event, and you'll be able to see basically how it affects different asset classes as well. So whether it's positively or negatively correlated with any of the asset classes. So quite a busy week ahead. Seems like we will actually get quite a bit of movement in the markets happening, especially on Wednesday and Friday. A lot of opportunity, a lot of volume actually coming through right now. Volatility seems to be picking up quite a bit as well. So happy trading, and by all means, if you have any questions, feel free to get in touch with us. We're here to support you and help you as much as we can throughout your trading journey. Thank you, guys, and have a wonderful trading week.